Well, Franklin McLarty has carved out his place in the business world in Arkansas and around the globe. The chairman and CEO of McLarty Diversified Holdings has launched a new company, an IPO, an initial public offering on the New York Stock Exchange. He is the executive chairman of MDH Acquisition Corporation, a special purpose acquisition company. McLarty and I caught up earlier in the week. MDH Acquisition Corp is what is called a SPAC, a special purpose acquisition company. This is apparently kind of a new boom in financial vehicles here. Maybe tell everybody a little bit about what a SPAC is and why someone would want to use that.
Well, Roby, first and foremost, I've got to acknowledge a place called Hope over your right shoulder. My dad would be irritated with me if I didn't. So it's nice to be here in a hometown setting. A SPAC, Special Purpose Acquisition Corporation, as you noted, they've been around for many years. Their popularity has really dramatically increased, as I'm sure many of your viewers have seen, both in television and print media. There's been a lot of discussion around that. I first got exposed to SPACs back in 2013 with my MDH acquisition colleague, Bo Blair, who's actually CEO of the SPAC. I'm executive chairman. Bob Johnson, our partner in the car business at RML, launched a SPAC back in 2013, and we had some serious engagement with Bob and his team about some targets in the transportation and logistics space. Didn't quite get there. Bob went back to his roots and did a deal in the entertainment media space, and then McLarty Capital Partners went on to refinance part of their balance sheet, setting them up for a deal with AMC Theaters back in 2014. So got pretty educated to the vehicles then, and then had more connectivity as we had one of our investments in McLarty Capital go public via SPAC, and then I participated in the PIPE, which is a private investment in a public equity PIPE of car lots, which went public via SPAC. So all those experiences really gave me and our team more broadly a lot of experience and connectivity to the SPAC universe, and I think we were able to bring those skills to bear in forming MDH Acquisition, which we're very excited about.
All right, so MDH Acquisition, this is a $276 million initial public offering that you guys have launched here. Kind of, I guess, explain this to me, too, in the way that a SPAC would work and what you will do with some of the capital that you're pulling together from this IPO. Is it where you're going to go find companies that are looking to come public, or is it going to be you've got two private companies that want to merge, or could it be either or?
Yeah, I think it could be either or, but our preference would be to do one deal with one company that wants to access the public markets. And the only reason for that is just simply lower execution risk dealing with one company than with multiple companies, although that's certainly not off the table. Bob Johnson's SPAC was, in fact, two companies coming together, and it was quite successful. But ideally, what we want to do, Roby, is to try to find a high-quality company that has a enterprise value somewhere in the 1.2 billion or greater region of valuation, and it really will be able to make the most of access to the public markets, which is really the most efficient capital market in human history. And so, over the last 20 years, you've seen about 50% less companies publicly traded than there were 20 years ago. And there are a litany of reasons for that. But I do think that SPACs becoming so popular and interesting to so many people are a reflection, at least partly, of how much more lengthy and expensive it is to go a traditional IPO route. So you've seen a lot of good, high-quality companies. One of my good friends from the University of Miami, where I got my MBA, actually just sold a company into a SPAC vehicle that was north of $3 billion. And they clearly could have gone public on their own, and they kind of planned to do that. But the certainty and the time saved, the ability to negotiate with the SPAC confidentially were all really attractive to them. And that's what they ultimately decided to do. So I think that you're seeing a lot of companies who might have traditionally over the last 10, 15, 20 years gone to venture capital or private equity say, hey, we like the public markets. Getting from A to B on a traditional path is a little too cumbersome and distracting for our operating business, but doing a deal with a SPAC isn't. And that's exactly the type of company, at least from a mindset perspective, we'd like to find.
Let's talk too just a little bit about what's going on in the financial environment right now. I mean, we're all coming out of this pandemic. There is a lot of cash on the sidelines. Interest rates obviously very low, so there's a lot of incentives to do investment deals right now. Do you think that the timing of you bringing this to market is also because there's a lot of pent-up demand and people are ready to? There's going to be kind of an explosion of new technology and new types of companies coming out of all of this.
Roby, I completely agree with you. You're going to see new companies, new technologies. You're obviously seeing, consumers and investors, not consumers, but investors rather, extend significant credit to some of the cruise lines, for example, when no one's boarded a cruise ship for over a year. So I think that your point about, the economy really coming roaring back is real. It's going to be different. How many differences from the kind of COVID time stick and become just part of everyday life versus how many sort of recede? And we'll have to see. I think that's anyone's guess. But I do think that getting access to the New York Stock Exchange is generally, a pretty significant achievement and sort of holy grail for a lot of operating companies to have that permanent capital. And so what, we really want to do is find a tier one management team that's ready to make the most of that. But I also think that the SPAC as a tool, given that we're happy to pay a price that's full price, so long as the company can support that on the public markets and then make good use of that public market capital, that's a nice advantage for a SPAC versus a private equity buyer or a strategic. Because you're a little more aligned with the seller on the price, because the last thing they want to do if they're part of management or if they're going to maintain an equity position in the company is have the expectations be too high, the initial valuation be too high, and then have the stock trade down and not trade well. That's not in their interest and certainly not in ours or our investors. So there is an alignment once you kind of have the makings of the deal and trying to find the right kind of Goldilocks, just right valuation. And I think that's a nice advantage in many cases when there's so much capital chasing deals and making those deals pretty rich on the valuation side.
You guys have a couple of wheelhouses that you claim you want to stay in: transportation and logistics, telecom, financial services, some professional services. I wouldn't think that you would have put this whole project together if you didn't already have a few fish swimming around your fishing hook right there. So tell me a little bit about those different areas that you want to sink your teeth into, and tell me whether or not you've got some prospects that you're already looking at.
Of course, Roby. Well, I think, look, our whole MDH Acquisition Corp is all anchored and founded on our team. And so, when you look at my vice chairman, Jim Wilkinson, worked with Secretary Paulson as chief of staff for Treasury during the financial crisis, 08-09, led Alibaba's IPO as their leading comms executive, and then founded Trail Runner International, which he's built in 5-6 years into one of the leading global financial services M&A, communications firms. They've just done an unbelievable job. So Jim's experience in that professional services field and the client work he does more broadly in that sort of ecosystem that it plugs him into. As I noted, Bo Blair, Little Rock native, based in Little Rock, was the CEO of the SPAC. Bo's been 10 years with JP Morgan here in New York, and then has been working with our family in various capacities on a variety of deals for the last decade. And then Brent Whittington, also an Arkansas guy, former CFO of Alltel, CFO and COO of Windstream, owns a really high-end bicycle manufacturing company in Colorado now. So when you look at the experience of all of us, certainly me and my family in automotive, with my father and my brother, who both done exceptionally well automotive, both domestically and internationally, that's a pretty developed ecosystem when you add it all together of relationships, of transactions, of M&A. So certainly we're digging in and leveraging those. And of course, you're not allowed by regulatory statute to really have any conversations with targets before we IPO. So we really had to go on our instinct and our knowledge of the past in terms of being able to source high quality deals, which of course McLarty Capital have been very involved in all these years. RML certainly built through M&A, and had the great privilege of being there for over a decade. So I think that we've been very encouraged, is what I would say, over the last 10, 12 days, 15 days, that we've had the freedom to speak openly with potential targets. I feel very good about those initial conversations and the quality of those initial businesses. And I feel very good about being able to find a high quality deal, get a transaction put together and announce that to the public, sooner rather than later. But while we have, a full 2 years, you don't want to wait 23 months and 364 days, right? So I think we're really focused on making sure we get that high quality target identified and agreed to as quickly as we can, while still being as diligent and thoughtful as we can about all the opportunities presented.
I have a feeling that knowing you as well as I do, that when it is the opportunity to speak about it publicly happens, you will let us know. So
I absolutely will, Roby, and be excited to talk to you again about it.
All right. Last question for you here. You also want to focus on what you call the heartland. What is the heartland? Define that geographical area for me.
I don't know that I have a rigid definition for it. I mean, certainly the Heartland Forward Initiative and the Heartland Summit, launched by the Walton family and the Walton Foundation, has a specific, geographic region. I think we defined it, generally as kind of starting in the Rockies, going over to the Atlantic Ocean and kind of straight down to the Mexican border. But I think, the real focus area for us and the real thesis is that, the center of the country, however you want to define that, but certainly, inward from the coasts, has really been overlooked in the last 10, 15 years of economic growth. I think some of that is because it's gotten a lot harder to go public. That's benefited private equity and venture capital, as I said. And when you look at where private equity and venture capital is concentrated, it's generally the coasts. Private equity more on the east, maybe, and venture capital more on the west. And so I think the result of that, and we saw this at McLarty Capital, and we saw it to some degree building out, RML, and maybe my brother did with MAG as well. I think that when you look in the interior of the U.S., you have some amazing public companies that have grown for years and decades. Obviously, several of those, right in our home state, Northwest Arkansas, Central Arkansas, and so forth. And I think that over time, as you've had the investment banks and the private equity investors, venture capital investors, maybe recede a bit more to the coasts, it's left a real void in the market. And I think that's been dramatically exacerbated during COVID, where you've seen so many corporate headquarters and so many individuals move to cities like Nashville, Austin, DFW, Northwest Arkansas. And that had already been happening before COVID, but really started to pick up steam, during COVID. And so in our view, that creates a lot of opportunity that's less competitive, because a lot of the bulge bracket investment firms just don't have a root system in the heartland based on the last 15 or 20 years of activity. So we think we've got a competitive advantage there, building on 4 generations of our family, building and scaling businesses in the heartland.
All right. Well, best of luck to you with the new venture. He is Franklin McLarty. He's chairman and CEO of McLarty Diversified Holdings, and he is the executive chairman and director of MDH Acquisition Corporation. Thank you so much, Franklin.
Roby, thank you. Always great to be with you.